Well, it appears the Trump administration is in brainstorm mode when it comes to containing the massive budget deficit. On the table, revaluing the country's gold reserves and creating 50 to 100-year bonds. Investor Peter Boockvar tackling the viability of these ideas in a note today. Peter, CNBC contributor, joined us now. He's the Bleakly Financial Group Chief Investment Officer. Peter, great to have you with us.
Hi, Melissa.
Explain to us the mechanics of marking to market the gold reserves and what that does for Treasury.
So in 1934, the Fed transferred their gold holdings to the Treasury and in return got this gold certificate. In 1973, that gold, which totals about 260 million ounces or 8,100-ish tons, was valued at $42. So on the books of the Treasury, right now the gold's worth about $10 billion. But in reality, with gold at around 2,900, those holdings actually total north of 800 billion. So I'm hearing chatter, and the Financial Times over the weekend in an editorial talked about the possibility that the Treasury, in a relationship with the Fed in terms of gold certificates or maybe a repo or other ways of basically injecting the difference between the current mark of 10 billion the current old mark, really, of 10 billion and what would be a new mark at 800 plus billion, and that cash would get injected to the Treasury general account.
So why does gold go higher in that scenario?
Well, it at least maybe would put a floor under the price of gold. Now, what would push it higher, we'll have to see. I think there's still other factors that have been in place over the last couple of years, like voracious central bank buying and gold becoming a really important sort of clearing of reserve transactions. China, for example, having $1 trillion of surplus, well, they're less and less recycling that in U.S. Treasuries, and they're doing it in gold. I think those trends continue on, but maybe just putting a floor underneath and really just telling people about the importance of gold in this world financial system that we're currently in right now.
I think that's exactly the point. I mean, it's not necessarily that it's bullish for gold, but it just puts a spotlight on what gold means and the importance of it. And I think the bear case people say, well, that will allow them to sell it. But I don't think that's really what's going on at all. I mean, if they were to sell it today, they would reap the mark-to-market gain. So it's not really where it's valued at. It's just putting a spotlight on the importance. Can you speak to that?
They have no interest in selling gold. This is just a sort of on one hand, the criticism can be it's an accounting gimmick. It's a one-time thing. It's a one-time injection of cash. But I think the administration is looking at a variety of different things to deal with the excessive debts and deficits we have. I mean, Scott Bessent, when he said he's focused on the long end, he was not kidding. He's looking at many different things to keep the 10-year sort of in check and not to see a retest of 5, because if you blow through that, you're talking 5.5 and 6. He wants no part of that. So they're looking at a lot of different ways of trying to avoid it.
And speaking of long end, I mean, in your note, you're talking about an even longer end, a 50 or 100-year bond. That idea was floated in the first Trump administration, never happened. What are you hearing now in terms of existing bond holders, Treasury holders, being able to swap out for a theoretical longer-term bond?
Yeah, so this would not be sort of your standard Treasury issuance, let's sell 50 to 100-year bonds, because we know the liquidity there, as seen with the 20-year, is pretty thin. This is something, again, trying to be creative on their part about swapping or trying to convince foreign holders of Treasuries to swap some of these holdings for 50 or 100-year Treasuries. That they would have limited ability to sell. The Fed would then create a potential facility allowing them to pledge that if they wanted to repo it. But the Financial Times article talked about this and sort of strong-arming some of our foreign friends and their holdings to take this 50 to 100-year paper. Again, another brainstorming exercise trying to term out our debt and even make it zero coupon so they don't have to pay an interest expense on it. Of some of the things in dealing with the financial situation that we're currently in right now.